Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. If you traded today based on structure and not emotions, chances are you were on the right side of the market. Today's session once again reminded us why planning beats predicting every single time. In this video, I'll quickly break down what worked, what didn't, and how our levels played out so you can carry these learnings into tomorrow's session. If this kind of no-nonsense market breakdown helps you, make sure to hit the like button, subscribe to the channel, and before we get into the analysis part, I have started a Telegram channel where I will be sharing the news and views related to the stock market. Uh, the link of the same is in the pinned comment, so make sure you are subscribed there as well. Be 100% rest assured that there will be nothing ever sold to you via that particular channel. No courses, no trading tips, no paid services, nothing ever. It is simply one more medium with which I can connect with my audience. And so the link is right there. Go and subscribe it to the channel right now. And what a day today. If you have followed our plan, if you have been a follower of the channel and not monetized today, then I think you need to work on the basics, right? Get everything, analyze everything, watch a couple of more videos, uh, and then you can maybe try to get the gist of how easy was today's market to trade, right? And see, higher VIX does come with its own set of volatility, but then as an option buyer, that is exactly what you need. Today is one of the highest profits that I have made in recent times. I took a small stop loss in the option selling trade, which I initiate, of course. I initiated the trade early in the morning at around 9:30, and because of this trending move which came in, it hit my stop loss and then again, of course, reversed and then formed a doji. So at the end of the day, it would have been profitable because that is how option selling works. But then I follow my rules to the T, so I put the stop loss for, especially for option selling trades. I put the stop loss in the system, and that is limited to just 1% of the entire capital that I use on the selling trade. So that is again much within the tolerable limit. So more on that in another video. We'll be speaking about the option buying trades, right? What a beautiful day today. Markets opened with a gap down below below previous day's low, below the level at which we were looking to short the markets. Showed some strength. Now, why do I say showed some strength? Because this first 5 minutes candle was a good candle. If you consider the low to the highs, it is a 0.5% move in Nifty, which is 150 odd points move in Nifty, right? It showed a very good strength, but then again, the strength could not sustain. And post this, Nifty went sideways for some time, tried again, could not break up above the high of this particular candle, the first 5 minutes high, and then ultimately broke the low. This is where I entered into Nifty puts, right? The pullback is also there. Try to understand, like when I say tell you, ask you guys to speak to the market, what exactly is happening, right? The first 5 minutes, Nifty showed strength, followed by no follow through, right? Had Nifty been in a mood to go up after this brief pullback or sideways price action, this move should have continued higher up. If Nifty's plan was to go higher up throughout the day, but then that did not happen. But then is it that we enter right over here? Absolutely not. We will need to wait for our rules. We'll need for this particular low to be taken out. And this is where I entered into uh, Nifty puts. This candle is where I exited because of the buying pressure. Again, good buying seen from this particular candle. And this is where I exited. I captured 109 points in this trade. What a beautiful, lovely trade it was. Absolutely easy. Uh, right from the moment I entered into the trade went into my favor. No anxiousness, of course. The speed with which it was going, the options were moving. So I always tell you guys that once there is a parabolic move that you see, it is easy. It is advisable to get out the moment you see some reaction which is opposite to your entry. So this is the reason why, again, this candle did not fulfill all the three conditions, which wherein it did not give us a higher high, higher low, and a closing above the high, the three conditions that we follow. But then I exited at this particular candle because it showed good signs of bullishness. After all these candles, which were red in color, showing that a good selling is there in the market, this candle showed a good uh, uh, bounce back in the market. And of course, markets could have, after this particular candle, also continued further lower. But this is where I believe that when you get a good profit in a very short amount of time, book it out. Do not get greedy, right? 109 points, entry at 10:20, exit at 11 o'clock. 40 minutes, 109 points on Nifty is not something that you get to see every day, right? These are very rare occasions, very rare trades. And I always ask you guys to not get greedy when you see such things on the screen. So, right, like I said, there was no anxiety in this particular trade. Like, is the trade going in my favor? Is the trade going against me? Do I need to take a stop loss? These are the things that you keep talking to yourself while you are in a active trade. But then this trade was smooth as butter. And like I said, the only anxiety or anxiousness that I had was that the profit numbers were increasing very rapidly. And you know what happens with them is they turn back again with the same momentum. And that is exactly what happened out here, like you can see. And I made a good decision to exit the trade at these levels. Absolutely brilliant trade. Now, anybody who would have seen my reversal strategy video, if not, go check it out. It's there on the channel. The only reversal strategy that you need is a good fall. We need a first bounce back. We need a second higher low or a equal low as well. A good double bottom, that is a simple strategy which is there. And then once this high gets taken out, this is where you plan your entry. So as per the setup that we have, this was a valid entry as well. But then I personally did not enter into the trade at the break of this particular high. Anybody who would have entered, absolutely, absolutely right entry, following all the rules. And you can look at the move which came in following the break of the bottom, right? The neckline of the double bottom. But then the reason why I did not take an entry into is because of the bearishness that the market is showing. And the bare minimum that I wanted the markets to do was give me an closing above the point 0.5 to 0.618 zone as well, which Fibonacci, as you guys know, I use a lot in my day-to-day active trading. And what if this particular move which was coming in was just a pullback, right? And out from around these levels, the markets could again have taken a rejection and gone down. So that was the reason why I did not enter into this particular long trade at this particular level. But then I waited for the markets to, and markets actually went on, moved above the 0.618 levels as well, gave us two solid closings. But then again, these two closings are not enough for us to enter into the market because the stop loss is very, very big. If you enter out here, the stop loss will be the most logical and right stop loss would be right here, which is not practical at all. So all we needed was a pullback, which today's market was very kind. It gave us a pullback out here above this. This is where I entered into a long trade with a very small stop loss. Now, the markets had already moved a lot from the bottom, but then the reason why I entered out here is because of the extremely, extremely small stop loss which I was getting. Another smooth as butter trade right from the entry till the exit on this particular candle, which is the 105 candle. Uh, Another 53 odd points in the kitty in the long side as well. So this is the beauty of high VIX environment. When the India VIX is high, it's rising, and you can get trades on both the sides. Of course, you have to go ahead with strict risk management, position sizing, everything. So the long trade which I took was in half the quantities in which I had taken this particular short trade. So I knew that at the end of the day, even if this is going against me, I will take a small stop loss, and that small stop loss will be in a lower quantity. And I already have a good cushion of profit out here in the first trade that I took in the morning. So that is what gives you the confidence, and that is something uh, which can help you to take some further risks in the day if you get a good trade setup, right? So this was also a very good trade setup. This was a very good entry as well. If you would have entered out here again, the stop loss would have been small. But then again, like I said, because of the overall negative sentiment of the market, right? The way markets are reacting or falling down simply. Uh, that was the reason I did not go ahead. Otherwise, this was a beautiful double bottom out here. Look at one way selling, first pullback, another move on the downside, move back above the neckline. That's the entry. So, yeah, I hope today's price action is clear. Although on the daily time frame we have a good doji, but then of course the uh, way the trades have moved, beautiful, lovely. I am very happy with the way I entered, and this has been possible only simply because of planning, planning out the trades, and then trading your plan, right? So that is exactly what I did. And that is the sole reason why I started this particular channel in the first place as well. So that we can move or take randomness out of trading and we enter each day with a plan so that we are prepared. We have our own set of rules and our own set of setups. And if everything functions and clicks everything, we every checkbox is ticked, it is only then that we enter into a trade. We don't do random trading, and that is something which I want my followers to or subscribers to imbibe as well. That is the only quality I believe which can help you in the long run as a trader. So like I said, a good enough doji candle which we can see, a good big range doji candle, uh, move on the upside, move on the downside, and absolutely crazy day. The good thing is, again, we have not got a closing below this particular zone, right? So this is the monthly Fibonacci level that we had drawn, and the good thing is that not a closing below this. And even if you look at the 200-day moving average, markets have taken a good support on the 200-day moving average, right? So this simple moving average, 200 is the daily chart. So and this particular line has a factor of 200. So this is the 200 daily moving average, which is a long-term uh, moving average, and of course, last average of last 200 days. And markets have taken a good support out here. Now, the issue with the markets is again, Mr. Trump. He, I believe, is in Davos and is delivering some speech, and he has given some statements. I do not know how true or the authenticity of the same. But then again, I received some forward messages from my friend who said that President Donald Trump has given some statements like, I have great respect for Indian Prime Minister. PM Modi is a fantastic man and a friend of mine. We are going to have a good deal with India. And I believe Gift Nifty is already up. US markets are already up. So most probably tomorrow we are going to witness a gap up opening. We don't need this is the day, 1 hour time frame. So tomorrow, most probably, we are going to witness a gap up opening based on these overnight statements from Mr. Donald Trump, as well as uh, he has given a statement about US markets as well as in the fall is uh, worth pennies and the market is going to double from here, make America great again. So this is one man controlling the entire global markets, right? So that is the power of the President of United States of America. And I do not know what else do we have in store right now. The times they sure are very, very uncertain. And that is the reason why I have already asked you guys to not do random trading and do controlled trading, right? Very, very controlled, very, very limited trading. So for tomorrow, what we can, we'll just look at these levels. So we got a clean swing on the 1 hour time frame again. So I believe it was not necessary to have deleted the levels, and we could have simply adjusted them. But whatever it is, we have the 0.5 to 0.618 zone mark. And actually, if you see, uh, so the 1 hour time frame Fibonacci levels that we had drawn yesterday were as per the low that was created yesterday. But then after market created a new low today, of course, those levels needed to be readjusted in the live markets. And if you look how crazily the markets actually came right at these levels, and then the selling which came in from right over there, right? So This is the beauty of Fibonacci levels and how beautifully they work on Nifty. For tomorrow, I'll keep the trade plan very, very simple. Above today's high, although the Fibonacci level is also very, very close, and I will take a early entry based on a good early quick reversal based on a double bottom. Again, the W format which happened here on a 5 minutes time frame, that is something exactly same. You can look on a 15 minutes time frame as well. A good selling coming in. First pullback, we got a second leg of selling, and then if we are breaking out above this high, we can take a long entry. Already, we would have taken a long entry above this particular move but of this particular fib level as well, but then because of the double bottom formation out here and because the levels are very very close, I will be, in case if market gives me a entry like this, I will be keen on taking an entry. Most probably if the market opens with a gap up, comes around here, so market has already taken a good resistance. So the pattern that we draw of market taking resistance at the levels, in case if this neckline breaks, right, this is where we plan a short trade as well. All right. So I will not be keeping anything very, very complex or complicated for tomorrow. I will be sticking to this very, very simple plan. And today was a very, very good day. I will be protecting my capital. I will be protecting my profits. I will not be trading very aggressively tomorrow. Only if something looks very certain, very, very good, it is only then will I be entering into those trades. Otherwise, I will be waiting for markets to give us some direction, right? So today we saw both selling and buying in the markets, right? So let's give a market a breather of 1 day, and based on the doji, which is there, of course, and of needless to say, if we open the gap down and below this level, below today's low, we are absolutely short, needless to say. But then do not directly short the markets, wait for a good pullback. So that's it for today's market breakdown. Remember, consistency in execution matters far more than one good or bad trade. Stick to your plan, respect your risk, and let the market do the heavy lifting. If you found value in this video, don't forget to like, subscribe, and share it with a fellow trader who needs clarity, not noise. As always, trade disciplined, stay patient, and keep learning. I will see you in the next one. Cheers, and thanks for tuning in.